Welcome to the Techno Fundamental Report for September the 19th. It's tough to make predictions, especially about the future. Yogi Berra. When we look at these indicators, and we're going to take a look at them this morning, these indicators that I use, I've built up a library of them that I've been using over the years, and some I have found to be very useful. But you take them a day at a time. You don't try to predict anything. It really kills me when I see these people on TV predicting future. And I just have to say to myself, they don't know. Nobody knows. So you have to realize you take it as things stand today and you deal with it. So the most important indicator that I want to point out this morning is the power index. Now, what this is designed to do is to give you a statistical educated guess as to what the Federal Reserve is going to do with interest rates and what interest rates are doing. So what we do with this indicator is we take the rate of change in the yield on the 5-year Treasury yield, and we look at it over 125 trading days. When it crosses below zero, it's telling you that the Fed's going to cut interest rates. Now, this was around the 1st of August. So this indicator really called it, and you can see what the yield has actually done. So it looks like to me that interest rates are now in a downtrend. Now, the Fed has a dual mandate. One is unemployment, one is interest rates. And, when it comes to investing in the stock market, you should concern yourself with only two things, which is corporate earnings and interest rates. And so interest rates are going our way right now. However, I think the Fed is more worried about unemployment now than it is about interest rates. And it should be. The economy is slowing. Unemployment is increasing. Now here is Jeffrey Gundlach. I heard him interviewed yesterday, and he said they were talking about the Somm rule, which was Claudia Somm's rule about recessions and her indicator using recessions. Well, Gundlach says that he has an indicator very similar and that it's giving a warning as well. So what he does is he takes the 35-month moving average, and when the unemployment rate crosses above the 35-week moving average after being below it, that indicates recession. So he is basically saying we are already in recession, and Claudia Somm says her indicator's not really working as well, but Gundlach says we've been in recession now for 1, 2, 3, 4, 5 months. So another indicator to just kind of keep an eye on, but it pretty much confirms the Somm rule, and it pretty much confirms what my power index is saying. Now, also, job openings fall to lowest point since early 2021. This is the JOLTS indicator, JOLTS data. And you can see the direction. So the economy is slowing and unemployment is becoming more of a problem. It hasn't been a problem, but it's becoming a problem. Americans searching for jobs 9% more aggressively than last year. Just another indication that the job market is somewhat soft. Now, when I think of artificial intelligence, and I hear that it's going to be a big deal, and I'm sure it will be, but we'll see. It reminds me greatly of what I've learned in the past about new technologies. So like in the early 80s, Microsoft came on with Windows, and we had computers, and it was really like, what are you going to use this computer for? It's nothing more than a fancy typewriter. But you had to use your imagination a little bit. Then also thinking about the invention of the internet in the mid-1990s, and, I didn't really understand it. So the key to this, I believe, is let the market tell you where to invest, because you're not going to be able to figure this out. It's just too many opportunities out there that you may miss, or you have to really zero in on. The market will tell you. The market told me to buy Amazon in 1997, and all they were doing was selling books. And however, that worked out really well for us. But anyway, when it gets to artificial intelligence, it really boils down to two things: machine learning and large language models. Now, what does that all mean? Well, I think what we're seeing in our work is a proliferation of software companies that are going to benefit from this. Now, you're going to have all kinds of things here where artificial intelligence can be applied, like the automobile. Here's a robo-taxi. I just saw a video yesterday about a robo-taxi in Las Vegas that's made by Amazon called the Zoom. It's real interesting. I think we should continue to keep an eye on Tesla and things like this. I'm hearing that the robo-taxi is going to be a big deal. This is an artificial intelligence coffee stand where you could just set it up and it takes care of everything. The other area that we're seeing is that there are going to be lots of restaurants that convert their kitchens to robots, food preparation and food delivery. We know of one called Sweet Greens, which actually makes salads, and they use a robot to make the salads, and they can make a salad in 3 minutes, and it's just as good as a human salad. Also, things like vision, also things like voice, your phone, so forth. But there's going to be a lot of areas that we're just going to have to let the market tell us which areas to go with. Now, this is really all about speculation. You have to understand the word speculation. It means you're trying to see the future. It doesn't mean you're gambling. You're just trying to see the future. And so Tiger Global plans to join OpenAI's funding round at more than $150 billion valuation. So the money is moving in this direction. So one of the areas one of the comments I would make is you want to look for the cousins. Example, when Cisco took off in the mid-1990s, it really was not the place to be. It was great, and it worked for a while up until the 2000 dot-com bust. But the real answer was to look for the cousins, meaning the companies that were going to benefit from the technology, and that was Amazon. So Amazon would be a cousin to Cisco Systems. Now, I did want to mention this indicator here. This is the aggression index. We talked about this last week. It gave a very troubling drop here. It's still not out of the woods. We've actually gotten the golden cross. So it'll be interesting to see if this starts to stabilize. But it continues to be somewhat of a problem for me. It really means that growth stocks are having a tough time. But, stocks in general don't do well when interest rates are rising. So maybe we're going into a downtrend in interest rates and stocks are going to benefit. So here would be a way to look at some of these artificial intelligence concepts. We all know about NVIDIA. Now, what's the problem with NVIDIA? NVIDIA is now a $3 trillion company, $2.8 trillion. Now, when I look at an investment, I have to say to myself, can I double my money in this stock? Because if you can double your money within 3 to 5 years, that works out to be over 15% a year. And I think for the risk you're taking, that's the kind of compensation you should demand. In fact, Gerald Loeb in his book, Battle for Investment Survival, basically says if you have that attitude, more than likely you're going to survive. Whereas if you end up investing in a lot of mediocre companies, well, I just wouldn't want to do that. Basically, this is NVIDIA. So let's look at some of the cousins that we're seeing right now. This is a company called Axon Enterprises. They just announced that they're coming out with an artificial intelligence audio feature where when the police officer is interviewing whoever, then he can go back to his office or the station, and artificial intelligence, which is large language models, will write the report based on the audio that he received, and he doesn't have to sit down and write a report, and he can go back to being a cop again. So I can see where that would be a big benefit. Doximity. This is medical technology, and one of the areas with medical technology is the same thing with Axum, where instead of the doctor, after you leave him, having to sit down and write a report, he has the ability to record the meeting, and you get into what you call voice recognition, and it writes the report, so the doctor can just go on back to being a doctor and see more patients. Impinge. Now, I'm not really sure how this one's going to work, but you can see the action here. It's acting, it's in an uptrend breaking out. This company is involved in a technology called RAIN, which is a form of RFID, radio frequency identification technology, to control inventories. And I think they actually use it at the library to control all the books that they've got in the library. Here's Palantir. Now, this is being heralded as the Microsoft of AI. It is acting well. It looks good. So all I can really say is that it's almost like you're in a dark room and you got to find the light switch. And the way to find the light switch, in my opinion, is to allow the market to tell you what to do, because you can't predict this stuff, but the market can. It's very efficient. So if you have any questions, please let me know. Thank you very much.